How's it going, everybody? This is BeatTheBush. After a few months of scaring myself, I'm finally starting to buy stocks again, and today I'm going to explain why. This video is brought to you by Webull. To support this channel, just sign up for this and you can get 2 free shares of stock just for depositing $100. Check out my referral link down in the video description below. If you guys have been following my channel, you guys probably know that right now I hold a bunch of gold, about 100K worth of it. Not physical gold though. I hold an asset called GLD. I bought it at $165 and I'm not going to belabor this because I talked about this way too much. It just keeps on attaining all-time highs. The underlying asset, which is gold, has reached $2,000 per ounce, and I still think there's a little room to go. However, the recent increases of gold prices have me concerned a little bit because it's accelerating in its ramp up. It kind of looks almost like in bubble territory. I'll explain this a little bit more further in the video. The other asset I decided to buy into is Bank of America at $25. This little bit of increase after I bought it is pretty much inconsequential. Now, you guys know I bought a bunch of assets early on in the pandemic, saying that I'm gonna keep it for a while, which is BAC, IRM, AT&T, and I just got kind of scared and I sold out of it. At the time, I sold out of Bank of America at around $24. So, you could say I lost out on $1 worth of it, maybe about 4%, and also possibly some dividends that they gave out along the way. I feel a little bit more comfortable investing in the stock market knowing that it's not going to rapidly deteriorate because there's so much support going on. However, I am still remaining very, very cautious with investing. I am not 100% asset in right now, just a small fraction of this. Right now, I even anticipate that Bank of America could drop by 20% on top of this, and I would be ready to keep on holding it and even buy more if needed. Even with infection rates at all-time highs, it's staying pretty high. I don't see it going down without a vaccine. Right now, it's around 60,000 people infected per day. Masks are just the new normal, and perhaps if every single person follows these rules, maybe the infection rate just could stay around where it is right now and possibly not cause another shutdown, which would really, really deteriorate the stock prices. For me personally, I like to go out into the world to take a temperature reading of what it's like outside. So I went to have some pizza at a restaurant recently. You cannot go inside to eat, but then they have outdoor seating. I feel pretty comfortable eating there. However, this was on a Saturday afternoon, and there were only a few patrons over there, so this is very concerning that the business is so slow for such a popular area. The $600 additional support for unemployment has ran out as of July 31st. Right now, there's still a gridlock on getting the next stimulus package passed. There's nothing approved yet. However, if this drags on for another week or two and this expires and people start defaulting, this could result in a rapid deterioration of the stock market prices. My opinion on this is that the government is trying to approve something, except they're kind of playing a game of chicken, right? To see who's gonna give in first. Someone's gonna give in first because they're gonna see the economy is gonna freak out, and then they're gonna go, oh my gosh, we have to pass something. So I feel like, yes, this $600 stimulus is going to expire. And then when something slightly starts to happen, then the government's going to start to freak out and then some new law is going to pass. And the anticipated amount of the next stimulus package is probably around $2 to $4 trillion. The last stimulus package with the $1,200 comes out to a total of $2 trillion. Now, the current US national debt is right now around $26.6 trillion. So if you add on another 2 to 4 trillion on top of this is another 10% in inflating the US national debt. Now, here's my simplistic reasoning for why I'm holding on to gold. If they're pumping money into the economy like this, eventually it's gonna get out there. It's gonna dilute our money. We see our money diluted already in terms of inflation because now when you buy online groceries, they charge a delivery fee. Sometimes even when you do takeout, they do some sort of safety fee. Everything, the prices of everything just sort of seems to trickle up a little bit, even though you're supposed to be paying a little bit less for takeout. And if you hold on to gold and inflation goes up, well, the gold is just gonna get dragged up with it. Just think of it this way, $26 trillion of total money, and then they add on another 2.6 trillion. Let's just say it's around there, right? Another 10%. So technically, you would think that gold is going to go up another 10%. So this is my reasoning for how much it is at right now, that it's going to go up another 10% from here. And I think people are going to freak out about this. People are going to overshoot and over anticipate this inflation rate, and it's going to overshoot twice as much. The first stimulus package is 10% inflation already, anticipated inflation, not real inflation just yet. But the second stimulus package is going to inflate it yet another 10%. So 20% total for the gold prices. If you look back in, let's say, January, you tack on 20% on this, and then you tack on another 10% for overreaction. And I think gold is going to land between $2,100 and $2,300 before I'm going to say, hey, this gold is just, running ahead of itself and it's time to sell. So it's very, very close before I'm thinking about selling gold. Right now, I'm even looking at it, just being very careful about it and just kind of keeping an eye on it. And I might pull the trigger on selling my gold soon because it does seem like it's running ahead of itself. I've already netted about 14% gain in a short 6 weeks or so. I forget when I bought it. June 22nd. So it's only been 6 weeks or so, 14% gain. This is ridiculous for gold. Now back to Bank of America. One of the things I like to look at is the Robinhood popularity list. This is the Robinhood app that people like to trade on. A lot of millennials like to trade on this app. The thing I like to look at is you don't actually have to have this app to look at the popularity list. You can just search for it online. Here is what it looks like. You can see how many users buy a certain asset. So they tally all this up and then they have a popularity list. The first one, interestingly, is Ford. 925,000 users hold Ford. This is more like an underdog thing. Robinhood users, for me, it seems like they like to bet on things that went down a lot, like Carnival, like Ford. Tesla is at number 8 simply because it's kind of like a bubble type of thing. They're a great company. I like the car, but they're number 8. 537,000 users holds on to Tesla. Now I want to talk about BAC, which is Bank of America. They're at number 15, 355,000 users, which is very, very popular. 1/3 the popularity of their most popular, which is Ford. And I think Robinhood users typically is a Warren Buffett fan. They follow him and they watch every single move that Warren Buffett does. They're all into Tesla, and Ford is just an underdog. They like to purchase into underdogs. I like to use this Robinhood list as a proxy of how popular things are or how much of a bubble certain asset is. This is a way for me to gauge if things are in a bubble. That's why I'm watching this in relation to Bank of America. So if Bank of America starts trickling up this list, which right now I think it is already, it's climbing up this list quite a bit, then this is an indicator for me to sell. Right now I just bought into it, so I'm just gonna hold on to it and see what happens. Bank stocks tends to not move very fast. You have to hold on to it for maybe a year or two before it can recover. So the fact that it's $25 right now, I feel short term, it could very well drop by 20%. So I would not be surprised if it hits $20 at all. And I would be ready to buy, maybe double down on it or something because I bought a small amount of Bank of America. I anticipate Bank of America could very well reach $30, $32 within a year. So technically, a 20% gain, this is a good deal for me. You also have the backing of Warren Buffett, so this says something, right? With Berkshire Hathaway stocks down all the way to like 1.0 book value, it might be a good time if you still believe in the guy. If you still believe that he is a very, very good investor in terms of long term, people like to laugh at him short term, right? It's like, hey, you're underperforming right now. But most of the time, over his entire lifetime, he got the last laugh. So you might, this might say something for maybe a year or two into this pandemic, or when this blows over, he might get the last laugh and have like a really, really strong portfolio coming out of this. If you guys are interested in signing up for your own Robinhood account, you are guaranteed one free share, and you get a 1 in 200 chance of winning a share of Visa, Microsoft, or Johnson & Johnson. And these stocks are valued at over $200. So you're definitely going to get some share of stock. And then there's a chance to win a very expensive stock. Check out my referral link down in the video description below. Thanks for watching, everybody. Don't forget to give me a like. Comment down below. Let me know what you think of the stock market. Are you buying into it a little bit right now, being very cautious or whatnot? And as always, don't forget to push that subscribe button and ring that bell icon. Thanks for watching.